Hello everybody, welcome to Commodity Culture, where we take a look at the commodity space and break it down for both new and experienced investors. My name is Jesse Day. We are back again at the Vancouver Resource Investment Conference, sitting down with the president of GoldSeek.com and SilverSeek.com, Mr. Peter Spina.
Hi Jesse, great to be here with you.
Great to have you here. So I want to start with a broader question about the conference, and that is, what are some of the main themes, or perhaps you can pick just one that you see coming out of the conference that you think investors should be paying attention to?
I believe one of the main themes is that the sector is turning around and that the opportunities are returning into a sector that hasn't had that many opportunities in the recent years. So I'm starting to see enthusiasm, excitement, but it's still on a small level, which is good because at the top of the market, like we saw back in 2011-12, this place was had several times the attendees, and you had a lot more companies exhibiting. So signs that market's at a top. This is much different, but we have now firmer precious metals prices supporting us and better prospects. So for the first time in a while, I'm sensing more enthusiasm and potential that this is the bottom, and that the sector, you're starting to get a sense that the money's coming back, so these exploration companies and development companies can start to do some work again, which you haven't had that many opportunities in the recent years to do so. So that's an important theme that I'm seeing this year.
Right, and that's an important point you also made about enthusiasm. There's a certain level of enthusiasm to where it gets to be too much, like you were saying, totally packed. When you start seeing everybody on TV talking about gold and silver, that might be the time when things have gotten too enthusiastic. So that's a very interesting observation. So I want to follow up on that. You're talking about the precious metals market. What's the reason for people to be holding physical gold and silver here in 2023? What are the main reasons you can think of?
Well, I think the main issue is we're been going through a high amount of inflation, whether it's in the U.S., in Europe, Turkey, other places, much higher than others. But the reason is you want a place to protect yourself. And in today's environment, you look around at your options: real estate, bonds, stocks. The risks are much higher, and the way that the economy is now, maybe it's a little bit of growth to no growth, a stagflationary environment emerging. That's very beneficial to physical metals. It's the best environment for precious metals. So this is very unique, where precious metals may be one of the few or the only, maybe with commodities sectors out there that has the upside to it. And we're seeing the other sectors just slowly, you get some of these rallies, but overall, you're not, crypto to stocks, other stuff there, it's not doing so well. So the precious metals, they're very important in this time where there's a lot of risks out there, and with the where we're at, the downside to upside, I think really favors precious metals at this point.
Right, and when it comes to differentiating between silver and gold, and we're still on the subject of bullion here, I think I want to talk about miners in a second, but when we're talking about the actual physical metal, is there one that people should be holding over the other to protect their wealth? Do they play different roles? What's your thoughts there?
Sure. Silver it's a higher risk metal in the sense that it moves to the upside and downside at a higher speed and rate than the gold does. It's a smaller market. Gold is more considered, the safe haven. It's money. It plays a different role. Where silver, it is also considered money, or has been, but it's an industrial metal, and it has that aspect to it. But it's such a small market, so when the investment interest does flow into gold, and if it starts flowing into silver, silver will react to it a lot more positively. I favor silver more than gold, just because there's a lot more of an upside. It has the industrial component to it. It has the green energy component to it as a green metal. And there's a structural supply deficit in the market. The gold market, it has a different role. It plays, it's there to protect yourself as a monetary insurance. So I think both are good for a portfolio. If you're looking for monetary financial insurance, you buy gold. If you want a little bit more of an upside and you're not too worried about an economic depression, maybe silver. So, but again, if gold really does take off and investment comes in, it doesn't matter if industrial demand starts to really fall because the investment side into silver will just overwhelm it. The inventory levels in the silver market are falling, so there's a lot more potential that the price gets squeezed.
Right. So let's switch over to equities here for a moment. The gold and silver miners. Are you seeing any opportunity there? And how do you evaluate a gold or silver mining company to determine if it's worth investing in?
Sure. The miners are really cheap. They've had a nice rally over the last few months. So sure, there's a potential here we get a correction from these. Some of them have doubled from their lows. But you look back, some of them have fallen 60, 70% from their highs. It takes a lot more to regain their former highs that we saw just from a few years ago. Each miner is different. You got to look at different risks involved on the risk side. You want to look at where they're mining. There's different geopolitical risks. You can get some taxation issues, more unfriendly governments in certain parts. And it is more of an issue as the price of gold goes higher. So you may get more risk coming in there. But for the moment, a lot of the miners at these gold prices they're doing quite well. There are some companies like Equinox Gold. They were just some of their costs just surged through the roof. They were pretty much a marginal miner. Now as the price of gold goes up, they become very leveraged to the price. So you can do quite well, but again, if the gold price goes down, you can be a bit of a problem. The companies can fall from that. The upside with like Equinox, they're bringing on a really low cost mine here in about a year, so that's going to change aspects. So every company has its different dynamics. You have to look at your risk profile because the smaller miners have higher risks. You want maybe to diversify with a company which has multi mines in different countries. You always want to look at their cash positions and their balance sheets and look at it from that perspective. But overall, it's not much of a difficult decision here for me to buy any miner. Their risks to downside are quite limited. I don't think gold and silver are going to get crushed here again. So at this point, I see any pullbacks in this sector as buying opportunities. The miners are going to make the move here first. They're going to get the initial flow of capital coming in, and then the juniors exploration stocks will start to make their move.
So you mentioned inflation at the top of the interview, and I'm wondering what you're seeing out there in terms of how inflation is affecting mine operations, because obviously you get a lot of increased input costs, the cost of energy goes up. So what are you seeing out there? How is that affecting the mining sector? And do you think it could actually be a catalyst to increase the gold price as more capital needs to be invested and a lot less companies will be able to economically extract it?
Sure. I think when you look at inflation, it shows itself up very quickly for the mining companies. They're one of the, they use energy, labor costs, commodity costs when they're building the mine. So they really see, they really are impacted by the inflation rate immediately. And yeah, we saw 10, 15, 20% increase in mining costs in some of these companies, and it's been a problem. They're doing their best to maintain, to manage and cut costs and deal with it, but there's only so much they can do. It's a difficult position. If the price of gold and silver do not take off, then it's going to make the incentive to build these mines less and less, and the capital's not going to come in the sector, so you're not going to get the development work. And we've had that problem in general with exploration for the last decade plus. Like there's these windows where money comes in and you get some development work, and then things go dead. So the sector needs a lot of capital to replenish reserves and resources, and the miners they need to invest more into it. And the incentive again is higher precious metals prices. So if gold and silver are going to continue to go higher, then it's going to be good. If we get and if it does correct and goes down, then boy, there's going to be some supply issues in the precious metal side.
Right. So I want to talk about institutional buying, because this is something that a lot of people believe could ultimately move the market, particularly when it comes to silver, which is a much smaller overall market cap than the physical gold space. Do you see institutional buying increasing in recent times, and do you think that's a trend that could develop more and more as we move forward? You were talking about investments in, bonds as a safe haven. Well, last year the bond market was down right along with equities. So maybe more of these, pension funds, et cetera, might eventually look to the precious metals for that part of their asset allocation. What are your thoughts there?
Yeah, the bond market has been such an easy game for such a long time that no one really thought of it as a much of a risk as a safe haven. Bonds.
Right.
It's ridiculous. It's debt. So there's an educational process going on. A lot of institutions, and you saw it through the ETFs, the gold ETFs, they were selling over the last few years. Even though the inflation rate is going up, they were chasing other stuff. Now that there's not a lot of sectors doing that well, gold and silver commodities are sticking out. I think they're going to come back to it. They're going to see gold now move to new record highs, and you're going to see this new energy and excitement, and that's going to get a lot of attention. And once you get the Western investor and the institutions competing with Asia, they're buying, boy, there's going to be real competition for the remaining supply, and that could really put a price squeeze. But the institutions, Wall Street, I think they're starting to understand gold again. It's not something that is as popular among the Wall Street crowd, but they're starting to wake up. I think that'll be a pretty dominant theme here in the next year onward, that you will see institutions return to gold and into silver. Into silver, that could have a pretty big impact. So yeah, that could have a pretty big price impact, and we'll the question is going to be, where are they going to source this supply? Because you're getting dwindling amount of silver supply out there, and if you get big institutions with billions of dollars, it doesn't exist out there for them. So for the retail guy, it's kind of like, okay, if you can get physical here without huge premiums, buy it now, because when the Wall Street crowd does come into the sector, it's gonna really take off, and sourcing supply will be a big issue.
So let's go from the soundest money around, the hardest money around, to potentially one of the worst forms of currency that could ever be created, and that is central bank digital currencies. There's been news stories coming out about this, central banks testing out. I believe if it's not this year, it's next, that the Fed is going to be testing out a central bank digital currency. The Bank of Canada has discussed it, although when it could be implemented, I think that's quite a ways away. Nigeria obviously came out with a CBDC that they restricted ATM withdrawals for their citizens to try to push people more towards that. Is this a real and present threat in the Western world? And do you think people are just gonna accept this? Perhaps there will be an incentive, such as we're going to give everybody $1,000 of this currency for free. How do you see that whole scenario playing out?
I think when there's a financial crisis and people are desperate for money, and they say, "Hey, we'll give you $1,000, $5,000, but you got to use this wallet that control," then people will fall for it. It's a big it's a big threat to our financial privacy, our freedoms, because when you talk about capital controls, you always think about international controls, taking money out of the country. Here you've got now a new way to domestically control people, and electronically, on a way where you can just switch off someone's wallet, or you can limit how much they can use from it and all that. To me, it's very scary. It's going down the wrong path, and it can be used in a very dangerous way against people. So I don't like that aspect at all. I think it's a big threat. Gold and silver is nice in the aspect that it's independent money. It's not controlled by any one group. It's private. It's anonymous. It's decentralized. It's the money of free people. So yeah, I think maybe it's not this year, next year, but it's coming. And when there's a financial crisis, they'll use that opportunity to deploy it, and that'll unfortunately people will be scrambling and will be extremely happy to get a free handout at that point. And that's how I think that they'll implement it. Right.
Now, let's shift to digital currency once again, but this time gold and silver backed tokens on the blockchain, because the one knock that some people have against precious metals is that they're very difficult to send across the world. Mm-hmm. Gold backed or silver backed tokens on the blockchain solve that issue. It also makes it more fungible potentially, as you can divide into much smaller denominations than you could with physical metal. But of course, there are concerns about counterparty risk. So this bullion must be vaulted somewhere. How is it being kept track of? In the case of a total, economic collapse, when you need to get your hands on physical precious metals, you're probably not going to be able to. So what are your thoughts on digital gold and silver?
Sure. I mean, there are risks, and I think with precious metals, you got to diversify your risks. So whether you're holding gold at home, there's a risk. If you're holding it in a vault, it's a risk. So I believe in general, you should be diversifying. As far as the tokens go, they provide a new way to use gold, like you said, as a currency, as a way to actually use gold in a convenient way. So applying this new, modern technology to physical metals, I think it's a fantastic way to get people to start using it. There are risks, so you have to be able to trust, and there are counterparty risks. You got to be able to trust these guys. So when you're working with the major guys, they're going to have audited by the major institutions these vaults, and it's not going to be risk free, but I would say it's an awesome way to start using precious metals as a currency, and it's very limited, in a local economy to be able to take an ounce of silver, an ounce of gold, and use it. So this opens up a new possibility of making precious metals a part of a more modern world, and I think it'll be very popular, especially in other parts of the world where they understand gold. In Asia and India and China and in the Middle East, Turkey, these places are prime for a currency that people, that want to use it and appreciate it and buy it. So this is a step forward for our sector. I think it's good, but sure, it's not without risk. So it's good to consider it and investigate, which of these tokens you're using, who's behind it, and looking at the audit reports, who's auditing, and so on. So
right, and it could also potentially be a way to kind of bridge that gap between cryptocurrencies and precious metals. So you had a lot of speculative money flowing into the crypto sector, which did not go so well for a lot of people. But I think a lot of those people who are used to the technology and maybe have never held physical precious metals, it'll be a lot easier for them to use gold and silver if it's a token, right?
Absolutely. It's so much easier to use it and to buy and acquire it. So it opens up a new market and a new demand source. So.
Yeah, absolutely. Well, thank you so much for joining us today, Peter. For those who want to hear more, could you tell us about goldseek.com and silverseek.com?
Sure. So we've been around since 1995, providing precious metals investors with the latest information and financial truth. You can find more about my work on the websites, and I'm also posting on Twitter at Goldseek, and on YouTube, do some interviews here and there, but mostly on the website, on Twitter. I'm active.
Great. Well, I'll put links to those in the description below, so be sure to check that out. Thank you so much for joining us, Peter, and looking forward to having you back on to continue the conversation.
Looking forward to it too, Jesse. Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.